you're looking for the potential of long-term growth, strong exposure to innovation, and a very tax-efficient way to invest into many of the world's leading tech-driven companies, Invesco's ETF QQQM might be one of the best options available in the market. And in this video, I'm going to break down everything you need to know about this ETF, and all I ask before we get started is if you do find value in this content, to consider hitting the like and subscribe button for future content like this. And so to get straight to it, QQQM stands for the Invesco Nasdaq 100 ETF, and it's a lower cost version of the well-known ETF QQQ, where both track the exact same index, the Nasdaq 100. All that means is that when you go to buy this ETF, you are able to gain access to 100 of the largest non-financial companies listed on the Nasdaq, primarily in sectors like tech, consumer services, and healthcare. QQQM is also what's called a passive index fund because rather than being actively managed by a professional fund manager, the fund uses strict criteria that determines what exact stocks are eligible to be included in the index. And also know that because this is a market cap weighted fund, the companies in the fund are given weight based on their size. So currently QQQM has 101 holdings, and its top companies include names you probably heard of, such as Apple, Microsoft, and Nvidia, where the top 10 holdings alone make up roughly 50% of the entire fund. And largely due to that, over 57% of the entire fund is concentrated in the technology sector alone. This is also why a growth fund like QQQM contains a great amount of volatility, but that volatility is also what offers the opportunity for higher reward. Even to compare this with the S&P 500, QQQM standard deviation is just over 18%, where an S&P 500 ETF like VOO sits closer to 15.5%. But that extra risk historically has been associated with higher returns, where QQQM has outperformed many of its peers over the long term. Now, because QQQM is fairly new, turning public in the year 2020, looking at its similar alternative QQQ, over the past 10 years, the fund has averaged 17.69% per year. In the past 5 years, it returned 18.17%. Over the past 3, it's averaged 19.82%. And this last year alone, QQQ returned roughly 16%, which truly shows that the market recently has been very strong for large cap growth stocks. On top of performance, QQQM is also very tax efficient, where it has a low dividend yield of 0.5%, and while that might sound like a downside to some investors, it's actually a major benefit if you are investing long term in a taxable account. That's because whether you reinvest your dividends or not, you're taxed on them every year. So the lower the dividend, the lower the tax rate, which can significantly help your portfolio compound even more growth over time. For example, a $100,000 investment in a dividend ETF like the popular SCHD yields 3.9%, which means that would add $3,900 to your taxable income every year. Where with QQQM at 0.57%, you're only taxed about $570 in dividends, which is a huge difference that adds up significantly over decades of investing. In fact, on a $500,000 portfolio, even a 1 to 2% annual tax rate could end up costing you hundreds of thousands of dollars in missed opportunity. Since learning this, I personally shifted the majority of my long-term investments in taxable accounts to be low dividend, high growth ETFs. And as far as cost, this is one of the biggest advantages of buying QQQM versus the original version QQQ, because QQQM has an expense ratio of 0.15%, while QQQ is more expensive at 0.2%. That means for every $10,000 that you invest in QQQM, you're going to be paying $15 per year in fees, and do know that that is going to be automatically deducted over time. You don't have to pay anything separately. And while it's slightly more expensive than SCHG or VUG, where theirs are at 0.04%, you're paying for the concentrated access to the Nasdaq 100, and if you favor that more, this makes QQQM even more attractive. I will say it's also worth mentioning that QQQM has a 49% overlap with the S&P 500, which means there are many of the same holdings, but the weightings are much different because QQQM is much more aggressive towards tech and other innovative sectors. And lastly, the fund Sharpe ratio, which shows how much returns you get per unit of risk. Of the 3 main growth ETFs that I've compared, it is currently 0.9 and the highest of the 3. Now, like I said, there are a couple of great alternatives to consider that consist of VUG and SCHG, where each have their own benefits. So if you want to see how QQQM stacks up against them, I've created videos on all of them, which I'll have linked in the description below. I've also put together an entire index fund cheat sheet that breaks down each of these ETFs and other top options available in the market. So if you want to learn more, I'll also have those linked in the description below. And as always, don't forget to hit the like, subscribe, and notifications button for future content like this.